Good morning, coming to you live from Nasdaq's global headquarters in Lower Manhattan. Welcome to the Thursday edition of Nasdaq Advisory Live, brought to you by Nasdaq Corporate Solutions. And I'm your host, Will Briganti. And joining me this morning is Josh Ellman from the Nasdaq Advisory Consumer Team. And Josh, good to have you.
Thanks for having me.
It's good to have you back. It's been a while.
It has.
And so we're going to have you on today to talk about the health of the U.S. consumer. So Josh, let's get started. How is the consumer doing?
Well, we just got the latest reading for July consumer confidence, and that came in at a reading of 121.1, which was actually the second highest level of consumer confidence since the year 2000, believe it or not. So the consumer is feeling very strong.
So what are the certain catalysts or sort of reasons why that spike in confidence is happening?
Well, the spike in confidence can be attributed to a healthy jobs market with the headline unemployment rate at 4.4%, home prices that continue to appreciate with a record level of home sales, a stock market that continues to hit all-time highs, and generally the consumer is in better shape when it comes to his or her overall balance sheet.
Right.
Additionally, we recently heard from about 1Q17 overall U.S. net worth, and that came in at a record for the first quarter of 2017.
Now, Josh, that's excellent insight. Now, how is this translating to spending?
Well, it's not really translating to spending.
Right.
I would characterize the overall spending environment as lackluster,
Okay.
and the evidence that we've been seeing supports my characterization.
Right.
According to monthly U.S. retail sales data, it has shown that the consumer is on the sideline when it comes to overall spending.
Right.
In fact, we've had 2 consecutive declines in overall retail sales, which have caused U.S. economists to ratchet down their forecast for 2Q17 GDP growth. Additionally, we actually just heard from the IMF, and they also lowered their overall 2017 forecast for GDP. So a lot of market prognosticators and pundits are scratching their heads as to why the U.S. consumer is on the sidelines and not spending. But when you pull back the onion a bit, you start to see some of the headwinds the U.S. consumer is facing. For example, while the jobs market is strong, wage growth is overall weak. Some are attributing the strength in the real estate market to a lack of inventory and minimal new home construction.
Right, that's right.
The inaction in Washington has created a lot of uncertainty, and we're really in the 9th year of a protracted economic recovery, which is starting to slow a bit. So the question I have is this growth trajectory neither strong nor weak? What is going to be for the foreseeable future?
Right.
And I do think that the second half of the year will be very telling when it comes to overall spending patterns, as the consumer is currently very confident.
You know, you mentioned something really interesting. I'll kind of go off script here for a second. I did see an article this week that said that the number of available homes, new homes in the U.S. is at the same levels as it was almost 20 years ago, yet the population is so much bigger. So it really says a lot about sort of home improvements and things like that.
Yeah, it's a very competitive environment, and that's why we're seeing the inflated
Yeah.
prices.
Got it. Okay. So let's get back to a second. So my final question for you is, how is consumer discretionary sector being impacted by the slowdown in spending?
Yeah, so we've talked about the slowdown in spending, but we're also seeing a paradigm shift when it comes to overall spending patterns,
Right.
as consumers move to more e-commerce platforms
Right.
and allocate their dollars differently.
Right.
So because of these challenges, it's created a lot of consolidation within the consumer discretionary space.
Yep.
Specifically, we've seen store closures, M&A activity, and bankruptcies. And to be honest, no one knows when this environment is going to change.
Right.
So consumer discretionary companies are having to navigate a choppy environment, and it's creating a lot of inconsistent results. And as I'm sure you're aware, investors do love certainty.
Right.
So it's been a very difficult time to invest in the consumer discretionary space.
Got it.
Now, I don't want to be all doom and gloom. There have been pockets of strength in the
course.
consumer discretionary environment, but at the end of the day, it is a very challenging space.
Well, we look forward to having you back. I mean, obviously, since the last time we've had you, there have been some pretty remarkable changes in the market. So Walmart made an acquisition of Bonobos, to get more into that sort of e-commerce, yet like guide shop, sort of like the influence of or confluence of brick and mortar and e-commerce. So, obviously a play there. as they look to sort of fully expand Jet.com, and then obviously Whole Foods Market with the acquisition from Amazon. So.
And just the other day, Michael Kors acquired Jimmy Choo.
Jimmy Choo, yeah.
So
right. Their first acquisition ever, yeah.
The wave of consolidation and does continue.
Yeah, got it. Well, Josh, thank you so much for that insight into the U.S. consumer. We appreciate you being on today.
Thanks for having me.
Look forward to having you back.
Yes.
All right. Well, thank you very much, ladies and gentlemen, for joining us. You've been watching the Thursday edition of Nasdaq Advisory Live, brought to you by Corporate Solutions. For more information on all of the insight that Josh and the rest of the U.S. retail team can provide, be sure to visit our corporate blog. That's at business.nasdaq.com. And you can always follow us right here on Twitter at MyCorpSolutions. Thanks so much for joining. We look forward to seeing you back on Tuesday. Have a great weekend.